Corey Tarlowe of Jefferies. Got a buy rating on the stock, $120 price target. Corey, I'm looking at Walmart up, I think, around 6.5% year to date. Costco is up a little more, but Walmart has done much better over 12 months. How is Walmart managing through this tariff uncertainty? We're expecting some impact to profits, but are they gaining share?
Thanks so much for having me, John. It's a really difficult environment, I think, for a lot of retailers to navigate. But the good news for Walmart is that 2/3 of what they sell is food. And they sold a lot of food, and they're the world's largest grocer. So that's on the positive, and that's actually a really good thing for the upcoming quarter that we have tomorrow. Now, the negative to that is that they've sold a lot of food, and that comes as a little bit of a lower margin. So that's where we do see a little bit of potential weakness in the quarter. But then on the outlook, to your point on tariffs, there is a lot of uncertainty. And we do think that because of tariffs, they're going to have to invest in price to try to drive market share gains, to your question, which might mean a little bit of uncertainty in terms of the profit outlook for this year for the company.
Now, what about the omni-channel strategy, sort of digital driving both in-store, pick up at store, and deliver to home commerce, and the idea that they had been picking up some business from the $100,000 and above households? Is that perhaps sticky? When will we know? And does that end up benefiting Walmart in the longer run?
It's a great question, and it's really critical to our buy-rated thesis, especially because about 75% of the share gains that Walmart's realized over the last 12 months are coming from these households that earn $100,000 plus a year in household income. And these households are coming to Walmart for value because they're tired of inflation. But the reason that they're staying is because of the convenience. And Walmart's really elevated the convenience that they offer, to your question, by offering buy online, pick up in store, buy online, ship to home, or ship to home via drone in 10 minutes, or even Walmart in-home, where a Walmart associate will walk into your home and put in your purchased groceries in your refrigerator and freezer for you.
At a certain point, do they start to bump into Costco?
Well, certainly their Sam's Club division, which has done very, very well, will start to grow stores and potentially bump into Costco. So you do have, to your question, Sam's Club is now opening stores. They have about 600 stores today in the U.S. Costco has a similar number, but Costco's for years has been growing at a rate of 20 to 30 stores a year, and Sam's Club for about the last 6 or 7 years has not. But we're at a really critical juncture for this business. It's $100 billion in revenue, and it's now going to be accelerating growth over the next 3 to 5 years. And you typically want to buy retail stocks ahead of accelerating growth. And Sam's Club is a really critical part of that.
So because of that, might you argue that the grocery business and that scale make Walmart a bit of a haven from tariffs, even though you might think the other way about all of the non-grocery stuff that's coming over, a lot of it from China?
I think that's very fair. And I think that Walmart is probably the best positioned within the retail landscape to navigate this today because they're scaling a lot of these higher margin recurring revenue streams that other retailers simply do not have. Advertising revenue, fulfillment services, membership with Walmart Plus and Sam's Club, and their data ventures business. These elements are going to allow them to invest in things like lower prices, invest in higher wages, and still drive margins higher. As a stock analyst, that is something that's really attractive.